Is this an inflection point?
Well, I think that the broader backdrop for this conversation is that the Fed has been trying to slow the economy down now basically since March of 2022. So in other words, the process of trying to cool consumption down is still ongoing. The process of trying to cool capex spending down, the process of cooling down hiring is ongoing. And all that is showing up in the data exactly as the textbook would have predicted. It's taking a little bit longer than what we all thought going into this year. We had a lot of people predicting, including the consensus, a recession coming. But I do think that we are getting to the point when the market will conclude that we will see the peak in the Fed hiking cycle. And as a result of that, then I think the answer is yes, we are getting closer to the inflection point when the Fed funds rate will peak, and therefore when the market will begin to see rates moving sideways.
So until we get there, how weird, and I'm stealing this from McKee, how weird is the data going to be? Like, there's something for everyone in like any data read that we're getting at this point.
Absolutely, Alex, and that's a very good point. That's why this process of trying to cool the economy down is just taking more time than what really anyone thought, again, when the Fed started. And the reason for that is that obviously when the Fed starts raising rates, then the first sectors that start responding are those that are sensitive to interest rates. So that was housing responded very negatively. Durable goods, meaning autos, washers, dryers, furniture, anything that requires financing, did respond in particular in the second half of last year. We have still seen a continued slowdown in a lot of those interest rate sensitive sectors, but what has taken particularly long time to slow down is the service sector. And the service sector is not as sensitive to the Fed funds rate and interest rates, and that makes up about 80% of GDP. So the short answer to your question is that we are still seeing that process move through where we're beginning to see delinquency rates go up for consumers. We're beginning to see default rates go up for corporates. It's still a very slow-moving glacier speed process that we have that's ongoing, but all that is indeed moving towards more of a slowdown over the coming quarters, including in non-farm payrolls. Here we'll get on Friday, where we should expect to see employment again continue to slow relative to where we were last month.